Hi traders, Niall here from learntotradethemarket.com. Welcome to today's Forex trading video. Now we've had some interesting activity on the Aussie dollar. Today I've got up the Aussie dollar cross rate on the daily time frame. I'm looking at the New York close. Now this doesn't include the Sunday trading session as a single bar. It includes the Sunday and Monday session as one full candlestick. So just to recap there, we're using New York close charts. And a lot of people ask me why my charts are different. I've been trading this way for almost 8 years now, and I think New York close are a superior trading tool. And for those using GMT charts, I think if you move over to the New York close time frame, you're certainly going to be seeing some of the signals that I'm looking at. So just to answer some of the questions I've been getting on the email, that would certainly explain a lot of the problems that you're having trying to find these signals that I talk about. Alright, so let's look at today's setup that I've found on the Aussie dollar. Obviously this has already happened. It's an after the event hindsight example. Any information here is obviously just education, not trading advice. I think it's probably too late to be getting onto this one anyway. But we'll have a look at it. It's a daily pin bar reversal with a 50% tweak entry. We've got a nice uptrend here. It's a pretty obvious trade actually. I thought I'd just throw the camera on and talk about it. We've got this uptrend line which is very obvious. If I take the chart in and zoom in, you'll quickly see the signal that I'm talking about. It's one of these famous pin bar reversals that I keep talking about. It's a very accurate reversal indication. We had one here, and we've also seen one in here. It was an inside bar pin bar, and we've also seen one here. So 3 setups have been profitable here, all with the trend of course. I advise beginner traders to trade with the trend only. You can see that this recent setup here is quite a powerful false break. We had a false break of the trend line. A false break is simply when you have a key level in the market which is broken, and then we quickly shimmy back up and reclaim that level. So you can see this false break signal here, very powerful, and the market opened up on Monday quite weak in fact, and we moved down to the 50% area of this candle. It's not Fibonacci, okay, it's a simple balance point of the range of Friday. So we moved down here and then have started to move up through the highs of Friday. So that's a bullish setup, one of the proprietary setups I talk about in the trading course, and certainly one of those setups. It's a bread and butter setup. Obviously you'll be taking these quite often on the daily charts, and when they appear as a false break signal against a trend line or a moving average or a support level, they're extremely profitable, and you can just see how profitable they are. We'll look at the previous example. You'll notice this right here on the trend line. This pin bar right here resulted in quite a significant up move. This one in here, another significant up move. Now, I'm not saying this one's going to take out these highs, but it certainly looks quite bullish. If you were to get long here, your stop loss could be below that low. I'm not sure how wide that is. It's quite tight, but your target would be simply a measure of your stop loss placement. Another way is to actually expand the range of Friday's candle. So if you're using the range of this bar, let's say it's 150 points, we might look at 2 times that range. From the entry here, we could look for 300 points of upside, which should be what, 91, let's say up towards 93. So somewhere in here could be the exit point. I'm not sure if it's going to get there, but obviously got to take the setups as they unfold. So that was just a quick video on the pin bar reversal buy setup on the Aussie dollar using the 50% tweaked entry. Obviously an advanced price action strategy that most overlook in the market, but a very profitable one that I've used for years.